Hello and welcome, and thank you for joining us. How are you now? My name is James Whelan, Managing Director of Barclay Pearce Capital's Wealth Management Team, joined with Heath Moss, HLM Investments, courtesy of Adelaide, South Australia's finest son. Heath, how are you now?
Finest son. No, I don't think I've got that title. I think that goes to Mark Rasciuto, doesn't it? Mark Rasciuto is the mayor of Adelaide, isn't he?
Is he
Um,
really?
yeah, yeah, something like that. I mean, he's on Talkback Radio every morning, and yeah, runs the show here basically. So yeah,
Well,
you know,
thank
doing
you everyone for joining us. This is the Theory of Thing Investment Podcast, regular edition. We haven't done one for a while, but it's just been like it's been that way.
mm,
Mate, how have you been? What's the latest? There's been a bit
uh,
going on.
yeah, pretty good. Family's been sick, so
Always, every time,
yeah, I've got
every
I've got a
time.
I've got a cough I can't get rid of. So
Mm.
if I mute myself, that might be why, because I'm having a coughing fit.
Yeah, I can carry.
But yeah, but we get into the real depths of winter here in Adelaide, where everything's damp for you know no reason. A little bit of
Mm.
rain, fog coming in. It's just probably the worst part of the year for Adelaide. But yeah, it doesn't last long. So, but apart from that, how are you? How are things going your end?
Ah, Mate, it's my theory. Speaking of weather, the theory that Sydney only gets 2 weeks of summer, three
Mm,
tops, two truly, and I reckon probably this week was one of them. Sorry,
mm.
winter. Did I say winter? 2 weeks of winter.
Winter, yeah.
Yeah, 2 weeks. Sydney only gets 2 weeks of winter, maybe three tops, and maybe this was one of them. Although sometimes I'm surprised, but based on the amount of bitching that I had from people, it was so funny because I'm usually the first one through here, and it's sort of part and parcel of running a place. And then you have to hear as every single person comes through after you and tells you what the weather was like outside. It's like, yeah, I know it was slightly colder when I walked in. Thank you for coming. Thanks for stopping by. No, I'm not that sort of boss. That's low. Mate, I've been good. I've been good. Funeral last week,
Yep,
a friend
yep.
of ours, and that knocked me for six. I went in a little bit too casual. I've got a pretty glib way of looking at these sorts of things, and then I just went, no, I'm going to need a bit more time with this one. So I took a little bit of time, a
Yeah,
proper mental health day,
fair enough.
and which
Fair
which I
enough.
needed. It's
Yeah,
and everything was covered, everything was good, the team was fine with it, everything was okay, not a problem at all. So
yeah, yeah.
um, and then I had that. So it was just yeah, it's still staying in touch, but generally just going, you know what, I'm just going to go and enjoy being having my feet on the earth and still walking and still staying upright and all the amazing things that you've got. And everyone should do that. And I want to have that sort of thing. Oh, speaking of which, it also timed in well because on Friday, that was it being a sluggish Friday that we had. I'm sort of planning it and just going, you know what, if I'm going to take a mental health day, it's going to be today because it's going to be the inaugural running of the BPC Invitational, the
Mm,
BPC Cup, playing for the Alex Hamilton Trophy, donated by the Whelan family, and it was an invitational golf game out at Northbridge Golf. Thank you very much, Northbridge GC. Kicked off at lunchtime on Friday. Hey, and in this industry, nothing's happening after lunchtime on Friday anyway. So,
no, no.
yeah, if as my old desk head at Ostock, Alan Birkinsley used to say, mate, you had all week to get that trade done. What are you doing? What are you doing here now, mate? Um, yeah. Anyway, so we did that. It's a skins format,
Mm,
and we were down. So it was myself and my playing partner. I won't say who it was because anyway, my playing partner, we were down 7-1 at the turn, um,
yep.
and had to. And I said, well, I refuse to let this go. This is a family trophy. It was belonged to my grandfather who won it back in 1983 or 1980, a year before I was born. I said I'm not going to let it get out of Whelan hands, or it's not going anywhere. And we clawed it back and clawed it back and clawed it back with three skins riding on the last putt.
Yep.
And I had about so it was an Ambrose format, so you both take two shots,
Mm, yep.
and I was about he'd missed his putt, and I've gone and lined up. It was about 4 or 5 meters out, so a fair length, a lot riding on it, and I just went of all the days of mental health day, this is not the strain that you want going through your head on a mental health day. As soon as I hit it, I knew it was good, and there was a
Beautiful.
small crowd that was there, sort of waiting to move through to the next screen, and I couldn't believe it. It was just the absolute the joy. So it was tied, 9 skins all. So the trophy does not go anywhere for the first year, for the first running, or for the first time. I'm going to try and do it every season. So that was the Winter Invitational. I'll have the Spring Invitational coming up in a couple of months, and let me know if you want to partake in that. festival and see if you can take the trophy.
No, I haven't played golf in many years. I stuffed my shoulder up playing basketball. So yeah, can't really play much of anything at the moment. So yeah, no, it sounds good. It wasn't like the live golf here in Adelaide where you got everyone in the stands and the cups and the beers are going everywhere when you sunk the putt.
I do little. Oh, there was actually, I threw my club, and I shouldn't do this on the green. It was late. It was late on a Friday afternoon, so there was only like maybe two people behind us or anything that was there. And I've thrown my club on the green, and it's taken this massive dent in the green.
Oh no!
And I've looked up, and there's the club pro is literally there waiting to get past, and he's gone from applauding the putt to looking at me and just shaking his head. I don't care. I just saved the day. So anyway, but no, there was a lot of cheering, a lot of hooting and hollering, mate. It was fantastic. So it's those are important those days.
Yes.
And the spirit of competition is still very much alive with our guys. So thanks very much to everyone who helped out with the BPC Cup. I need to make it for charity. The next one will be for charity. So we'll see how we go. And I think it'll probably be something like, I know Mitchell Pearce does something for men's mental health, about men's talking and keeping people busy. He does, and he's a good footballer and a good guy. I was on the back of a boat with him a couple of months ago, and he's a really good, genuine guy. So that might be that one. I got to find a good mental health charity to dedicate something to when we do this sort of thing, because it is important. I'm really, really focusing on this stuff now more than ever, because winter really brings it out of you, mate.
It does. Yeah.
What do you got for us this week, mate?
Oh, it's been quiet, hasn't it?
What?
You gotta allow me to share the screen so I can bring this
going on. Trump, we can't even. I can't even. It's so funny in the media now. It's just like we can't quote what he said, and so what? Bloomberg is just running the F-bomb on a 24-hour cycle.
That was quite remarkable. I mean, I don't mind it. I mean, speaking his mind, he was obviously frustrated with the situation, but it seems like the situation simmered right down now. A bit of honesty and that out of a president, rather than everything being scripted. It doesn't matter. But the memes to come out of it's just that's what we live for during the Trump era, isn't it? The memes that come out of these things.
He is of anything that will be remembered. His ability to just make a meme and make historic. He's the king of historic moments. It could be nothing at all. Sitting down, just signing a thing, and it's just like someone's taking a photo. It's just something about these grand moments that just to follow him around.
Yep.
I'm not saying I like him, but I'll tell you what, the way that he has handled the last couple of weeks with Iran and Israel, you got to say it's not a bad way of going about it.
Yeah, he didn't stuff around. He just basically got the job done. I mean, you got conflicting reports as to the amount of damage that's been done. Some saying none of the enriched uranium has been damaged. I mean, that's fine as long as the facilities that are used to enrich it. Because at the moment they've gone from late 2000s it was around 3 to 5% enriched, which is what they use for nuclear reactors for power, which is fine. But then they've moved it up to about 60% enrichment, which starts, and you don't need that unless you're starting to look at making nuclear weapons, because nuclear weapons need about 90% enrichment. So they're on their way.
Right. We all became experts overnight, didn't we? Suddenly we're just going to do these things. What's the next thing going to be?
Went from tariff to enrichment and nuclear enrichment experts, and we're going to be tariff experts again next week, because apparently there's a few deals flying around that will be announced next week.
There are some deals flying around. The other big clanger that's coming up is the fact that the 30-day grace period is fast approaching as well, and so we're going to see if it's a taco and the taco. A double taco.
The 90 days from...
he threw it out, and then that number is now coming, and it's going to be, well, if you don't have anything sorted out by then you've got to keep on going. And as it was Brian, what's his name? Brian, really good guy, Australian Retirement Trust, when he was speaking at the ensemble thing the other day, just saying a trade deal, you want to negotiate a trade deal, it doesn't take it takes years to go through the intricacies of figuring out a bilateral trade deal. This is insane. And don't even start me on, say, Europe. That's it's not even possible.
I think he just wants the framework of a trade deal there that they can continue working on over these years. Apparently, Lutnick was saying this morning that the Chinese signed off on their trade deal 2 days ago. So rare earths and magnets and that will start flowing again over the next few weeks. The EU came out and said they've got something to put in front of Trump. India, Japan apparently are all ready. So they'll make a big thing out of it next week. They'll have, it'll be a week of just deals coming through. So I don't think the market really cares though. I think the market's like, well, we know what the worst is, and we can price for that now.
Yep.
And it's going to be, and I think whilst this court case is going on, I don't think Trump and that will want to pee off the courts too much and slap those ridiculous tariffs on again. I think they'll just say, Taco, they'll go, all right, we've made really good progress with the EU. They need another 90 days. So bang. It's a bit like TikTok, how he keeps on extending the TikTok deal. So yeah, I think we'll
is that still a thing?
Yeah. Apparently, he just extended it again. So as long as people are conversing and actually, at the table, I think he doesn't mind. So yeah, that's where I'm at with it. I think tariffs are done. We move on to the big beautiful bill. We move on to deregulation, which I think is going to be huge in the second half of the year. Getting those banks, providing more credit to the US economy and to consumers, I think is going to be huge for the rest of Trump's term, and will really drive growth moving forward. So I think that's more what the market is now focused on, and obviously a little bit of the economic fallout that may still come from the tariff stuff that happened in April and May. I think obviously we're just making sure that nothing nasty is hiding underneath the covers or something like that.
Yeah.
So, yeah.
No, solid. What have you got? I've got charts. I've got things that I want to talk about. You've got things that you want to talk about, and I think that we're about to come together with our trade that paid as well, which is going to be good. Yep. We're on the same page with this one.
Definitely.
You've watched some things. I've watched some things. Oh man, I need to look at how I didn't get any sleep last night, mate. Seriously, I've got some stress. I've got some stress coming in, mate. It's all right. So please, I'm going to sit back, entertain me, please. Heath Moss with the market wrap. I'll interrupt appropriately.
No worries. I will bring up my screen. There we go. Beautiful. All right. We got the S&P 500 up on the first screen as per usual. Almost broke new highs last night. There at the top there. I think it was a couple of points away from closing at all-time highs. Again, markets recovered on the back of tariffs. The Iran situation simmered right down, although Middle East conflicts never have major impacts on markets. They may have a small blip, but they never have a major impact. They're always very fast and over quite quickly. So we've had that again, continuing with the soft data theme. We saw retail sales last week come out in the US were down 0.9%, which was lower than expected. But if you look at the core, which was ex autos, it was up 0.4. So not too bad. So a little bit of that front loading of the tariffs impacting those retail sales, obviously, because retail sales were quite strong in the months before because everyone was front loading, especially on autos. Whereas this month, obviously, no one's buying a car because they got tariffs whacked all over them. So that's that. We had initial jobless claims come out last night. Softer than expected after a few weeks of being quite a bit higher. Well, not quite a bit higher. They've moved from around 220K and got as high as I think about 250K. They're back down to around 236K, but they're volatile numbers. And the trend is still rising, but it's nothing to be concerned with. But like we've said in previous podcasts, that's where we're going to watch the initial jobless claims. That's when people need to go in, request a form to get some sort of social security assistance because they can't get a job. It also signifies it's taking people a lot longer to find a job. If that thing is rising, because people obviously go through their savings and their severance and all that sort of stuff first, and then go for social security. So I think that's one we need to keep an eye on. Apart from that, we had we haven't had CPI out in the US. We had the Fed meet and they basically did nothing. Although Powell's tone changed a bit and was a little bit more dovish. he actually suggested that, hey, cuts are back on the table again if things with CPI come out as expected, because CPI really hasn't moved despite the tariffs come in. Now that could be, there could be a delay there because of inventory build-up, so prices are remaining quite low still. It could be just other pressures like rental. Rents are coming right off in the US, which is a big weighting on the CPI, so that could offset any gains in tariffs. So there's quite a bit of a mix there, but CPI is really behaving, and they've got their PCI figure out. I think that's out tonight, maybe tonight, which is the big one that they really concentrate on. So as long as that behaves, then I think
I think that's tonight. Yes.
I think if that behaves, then I think a July cut is on, because at the moment I think September is where the market is pricing the next cut. But I think
it was over, what is it, over 85% chance of it being cut by September. So that's basically a given on that, unless there's some and look, I think we've got a couple of cuts coming between then. I do actually think I think the playing politics is going to be a lot about it too, just with the fact that you've got Trump, sort of influencing that now, and then sort of picking out who his next guy is going to be.
Yep.
Chris Waller, not Chris Waller. He's a jockey. He's a trainer. We're going to have Chris Waller, all-star horse trainer, is going to be the leader of the Fed. Atwood, hey, what's worse, mate? What else have we got for us?
Well, like you said, I think media is making a little bit more out of this Powell situation than there is there, because Powell's only got 11 months to go. So would Trump worry about trying to oust him early, and go through all that sort of pain and rigmarole when he's only got 11 months to go? So I mean, what do we got? NASDAQ new highs. So after all is said and done, that big dip there, that 25%, I think the NASDAQ went down. We're at new highs now again. That AI story, the earnings in the Bag 7 and right across tech sector are phenomenal. They're stronger than ever. So there are no concerns there whatsoever. And I think even Nvidia cracked a new high last night as well. So looking really, really good there. 10-year yield is coming off. Obviously, they initially spiked on the back of tariffs, and has come off now because of the weakening US economy and the fact that tariffs are sort of they're not having the impact on CPI that we expected. We had that revised GDP figure as well last night, which came down to, was it negative 0.5% from negative 0.2. I think it's the last revision they do. So that will be the official one. Consumer spending was was quite weak. Services was quite strong, but the main influencing factor was net exports that dragged 4.7% out of GDP. So I'd like to do a comparison to see where exports were in like Q4, just to see where GDP would be if it was a normal exports.
And I'm counting on the next quarter GDP being like flat to very marginally negative, and I think that I've lost that bet already. But we'll see.
Yeah, well, the reverse should happen with exports. And net exports should have a much less weight on GDP, and I think even the Atlanta Fed now is saying around 3% growth for Q2. But everyone will focus on that consumer spending and see if that remains half decent, which by all figures coming through in terms of, if you listen to the corporate speaking, most are saying, geez, consumers are still spending quite solidly. So so that's the 10-year. Copper just popped over the last couple of days, and that's because of inventories
over the LME.
Over in the LME are right down. Even the inventories over in Shanghai have come right off, because obviously they're worried about, there's still these tariffs to be the Section 232 tariffs that are expected by November this year on things like copper, etc., and gold and whatnot. So there's concerns there, and there's a lot of arbitration happen where they're moving from the LME to the COMEX to get ahead of these tariffs. But there's still just not enough copper out there at the moment. Smelters.
No, there isn't. There isn't.
Yeah.
Well, can I cut in with my bit, with my little play? And this is sort of just echoing off the back of a note that obviously it went out in May, but now that they've released it via the podcast, Morgan Stanley's note on robotics. Humanoid robotics, which has come out. Aussie guy on it. You don't often hear the Aussie thing talking about critical minerals and how critical they are. I suggest everyone listen to the podcast. It's on the Morgan Stanley Thoughts on the Market, but the stats were extraordinary. So much so, I went on Ausbiz yesterday and I just got to tell you these stats. And credit to Morgan Stanley for it. Look at the note; it's fantastic. And then I think that we might be able to come to our little trade that paid and then get onto the footy and get the hell out of here, mate. So with regards to humanoid robotics, so they're talking about this and the shortage that's ahead and how long it takes. Here we go. Each one of those machines eats a kilo of rare earths. This is each one of those humanoid robots, a kilo of rare earths, 2 kilos of lithium, 6.5 kilos of copper, 1.5 kilos of nickel, 3 kilos of graphite, and about 200 grams of cobalt. Importantly, this market, from a cumulative standpoint by the year 2050, could be to the tune of about 800 billion, which is a big number. Now, China dominates the market, as we know. 88% of rare earth supply in the world, 93% of graphite supply, and 75% of refined lithium supply. Refined lithium is important because lithium is everywhere, and it doesn't matter. Now, here's the kicker. More importantly, it's now taking, get a hold of this, 18 years to get a new rare earths mine online. And that's not just a made-up prediction. That's actually the statistic for the past 5 years of mines that have come online. So why is it up? That's up 50% from the last decade, driven by long approval processes in the Western world. Thank you, California. Alongside very long exploration times that are required to get some of these mines up and running. And by 2040, so here's why we got the trade that paid, because this is sometimes things come up in the narrative, and this is why you got to sort of catch these trends. By 2040, Morgan Stanley is expecting that the rare earth market would be in a 26% deficit. 2040 is not that far away.
No.
Would be a 26% deficit in the rare earth market, and lithium could be in a deficit close to 80%. So that's lithium, which is everywhere. And I've ended that. We've got a couple of things. So what's the trade that paid, Heath, based on that?
Well, I for I don't know, some unknown reason, it just dawned on me to have a look at the lithium sector again, because
isn't it funny the way it just comes around?
Yeah, I know. It's just like I was thinking, I haven't looked at it properly for a little while. I'm out of lithium at the moment, although I've dipped my toe back in now. And I thought, okay, let's go have a look at how things are going. Watched a few podcasts on YouTube, about 2.5 hours the other night, and I've come to the conclusion that I think it's safe to dip your toe back into lithium now, but you got to be prepared to hold a while, because what I think the lithium sector has bottomed in terms of the price of lithium. But we could run along that bottom for a little while, because there is still oversupply and there's still high inventories, which, the market will need to get through. But, the drivers behind it, now they're talking, like, if you look at the Pilbara Minerals latest presentation, we're using about 1 million tons of LCE, lithium carbonate equivalent, at the moment per year. They're forecasting that grows to about 2.5 million LCE by 2030. So only 5 years away, not even 5 years away. Other analysts I've seen as high as 4.6 million tons of LCE by that time. What's driving it? Now, obviously, EVs is the big one. But things have changed in EVs, and this is driven by Chinese technology. The battery packs that they're developing have developed.
I did see the thing on the battery packs. It's incredible.
Much better cooling. So they put these copper lattices around these batteries now, these cells, so they can pack the cells more with more chemicals, so more lithium, etc. So they're saying that the battery packs are going to go from an average of, I think, 50 kilowatt hours to around 200 kilowatt hours over the next few years. And what that means is it's an average of 64 kilos of lithium in one of these battery packs for a car to 300 kilos. So it's all about the cooling. So as long as they can keep the temperatures down, they can pack it more of these chemicals in, make it more dense, and then these battery packs can go for 1,000 kilometers rather than the 400 to 500 that we're getting today. So that's a big shift, and that's a big so much more lithium needed per car. And of course, the sales of these EVs in China are still going nuts, rising anywhere between 15 to 30%, depending on where you look per annum. The USA and Europe and the rest of the world still need to catch up. But then you have also on the back of that, you had stationary storage batteries. So, massive batteries like we have in South Australia and New South Wales, connected to the grid to help with, providing us with power. Now, the reason that's going to start growing now is because there's been so much investment globally in solar over the last, decade that, solar really isn't all that, economical and worthwhile unless you have something to back it up with batteries. So that's starting to happen. You're getting much more investment in batteries to back up the solar. And then the Middle East have come out over the last couple of weeks and said, put a real focus on renewables. So they want more batteries, they want more solar, they want more EVs, etc. And they've got quite a large population over in the Middle East as well. So the things are starting to come together. But like I said, there is still an oversupply and high inventory. So it'll take a little while to get through that. But I think if you're happy to hold for 12 to 24 months and sort of buy some companies that are cashed up and can survive the lower cost lithium cycle we're in at the moment, then I think in a couple of years' time you're going to look back on that and say, hey, that was a good deal. So yeah. So you want to talk about a couple of companies? Yep.
I like PLS as well.
Yeah, I think Pilbara's my number one.
I put a note out to, we've got clients that just want trades. Give me a trade. Give me an idea. It's great. Yep. And it's not my bag to be 100% on that because I've got to try and run a company at the same time. But tell you what, this one was, I chucked a few notes together and just went, have a good look at this. So we got that in the boil yesterday afternoon and this morning, and she's showing some good ones. And there's a part of me that wants to go, you know what? I hate taking single stock positions for our longer term clients, but it could be one that really gets added into there, depending on that. I've had these, especially lithium, because you get just talking from career protection, investment protection, clients' portfolios. You got, so I'm going to put a small part of your portfolio, your super fund portfolio, into something that we know has disappointed in the past in the lithium space. It's a bit of a difficult conversation to have with clients, and just to say, and then if it goes down, but it could be a while before you start to see it come back again if it does come off.
That's
a tough one to play.
The whole point is we're getting in now and just dribble a little bit in because we can't pick the bottom. We don't know when the bottom of these share prices are. And Pilbara is my top pick as well, simply because their cash position. They're sitting on $1.1 billion of cash, with another 675 million of undrawn debt that they can focus on. So they can survive this, lithium winter. They're probably losing a little bit of money on lithium at the moment per ton now, because the prices have come off a little bit again, but they can survive it. And they've got great assets, high production, probably the best in Australia. I'm also looking at Sigma Lithium in the US. SGML is their code. They have operations in Brazil. From find to mine, this one was really quick. It got up within like 5 years. That's how quickly they do things in Brazil. They're profitable now at current lithium prices, very low cost, high grade stuff, producing about 270K tons of spodumene lithium at the moment. That's increasing about 520 next year. Only got about 31 million cash, but they did get a massive loan from one of the major banks in Brazil for $480 million at a 2.5% interest rate. So absolutely sensational deal there, considering where rates are at the moment globally. So they've got enough liquidity to expand, to continue, see cost of production coming down, and that's what we want to see. So, and it's the same thing actually happening with Pilbara at the moment. Their cost of production is coming down because they're actually grades are going up. They found much more higher grades, and that makes things a lot better. So yeah, they're my two. Yeah, they're my two.
Yep, I like that. I'm with you on Pilbara as well. I think that's a good one. Yep. It's also a name that people know. You don't have to try and reinvent the wheel when you're putting people to talk about it, right? So it's a name that people know and love. On that note, are we ready to move on?
Yes.
Talk about footy, because we've gone a touch over time, and that's it. And I've got a few things that I just want to be able to take care of. I'll go first. My Tigers of Western Sydney, whatever they're called, the West Tigers, whatever the hell that is. They are playing Manly. You know how much I hate Manly. You know how much
Yep.
I love those Tigers. Until the Bears get back in. West Tigers plus 6.5. That'll get you all the love you need on the weekend. I think that's coming up. That's tonight. Get on it tonight. I'll throw you in with a Saturday one as well, a Sunday one as well. Melbourne versus Cronulla. Yeah, and Melbourne versus Cronulla. Melbourne minus 9.5, so they'll beat that 9.5 spread. Put those both together, $1.90 each, and you do the dim sums. Bet with your head, not over it.
Mm-hmm. I am going. Where am I going? I'm going. There's two possible bets. Collingwood versus West Coast on Saturday. The line for Collingwood is 60.5. I am taking that line. I think they win by 80 plus. West Coast, abysmal.
AFL is such garbage now, man. I'm sorry. That's crazy. There's 2 tiers, mate.
Yeah, there is. There definitely is. There's probably nine teams out there that are probably half decent and can do something, whereas the rest is just absolute.
I'm going to put this bet on as you do it here. Let's see what we got here. Go on.
Yep. Collingwood at negative 60.5. The line.
Yep.
I'll take that. And then the Crows playing Richmond at the G. The line's only 37.5. I think we win by close to 10 goals. I think despite it being at the MCG, we got a bit of hoodoo there. I think we still win that easily because we're playing well. So
what are you taking? Crows minus 37.5?
Yep. Yeah, pan $1.90. So is the Collingwood one. Yeah. You put them in a multi.
I'm going to put that in a multi with my NRL ones as well. Manly Seagulls versus West Tigers. I've got Tigers with the START. And let's see how we go here. Oh, 7.5.
Oh, nice.
I love it when that happens for no reason at all that I can see. And Melbourne Storm to absolutely beat the pants off the Sharkies. Don't like those Sharkies. Minus 9.5. There you go. Right, chuck them all together. You got yourself $12.89.
Jeez. Hey? Not bad.
Put that in the skyrocket in this economy. Hey,
mate,
hey.
Mate, you might be retiring next week.
Don't need to work. Job done.
Yeah.
I'll still come into work because I just love being here and hustling people. Is that all, mate? Thanks very much.
Yeah, I'm done. I'm ready to go.
I'm done too. You have joined us, Heath Moss of HLM Investments and James Whelan of Barclay Pierce Capital's Wealth Team on the Theory of Thing Investment podcast. We hope that you've enjoyed it. Any questions, comments, or feedback, please let us know. Always happy to talk whenever you want. Heath, mate, thanks very much.
Thanks, James. Have a good one, mate.
Stay safe, everyone, and have yourself a good weekend. Bye.